Almost every day I get a call from an investor that actually talks about what is going on in this crazy market. And they're very concerned that real estate is about to take a dive because interest rates have gone and are continuing to go up by a few basis points every quarter or so. Now, here's the thing about the actual market where it exists. Yes, interest rates are going to make changes to the market, but they're not going to make enough changes to actually stop the market from working. And there's actual reasons why this is true. Number one, we are on the backside of the shortage of real estate. We are on a shortage of real estate because of the backside of the bubble that came through in the 2008, 2006, 2008 crisis. So 2011, 2012 in our market was when the most properties came through. And so because of the arc of that volume of properties, it slowed down the new builds. And the law Dodd-Frank that came through also slowed down the new builds. So we actually had a slowing down of new builds over the last, in that period of time, in the last 10 years. We've never caught back up in those new builds. And right now, once COVID hit, we also had supply chain issues that slowed it down as well. So there is a lack of inventory in the marketplace that we have not seen since the GIs came home from World War II. And why was it when the GIs came home? Because while World War II was on, all the economy was working to produce the war machine. So they stopped building cars and they stopped building houses in that period of time. And when all those soldiers came home, you had people getting married and having children, and houses were in short supply at that time. This is the second time this has happened in history. So it's a totally different context of being this short on inventory. In my local market that I build in and do rehabs in, we normally had 600 to 800 houses on the market. In the worst part of the inventory bubble, when having too much bubble in 2010, 2011, 2012, we had about 1,200 houses on the market in the whole county. Right now, on the average, we have somewhere between 60 and 100 houses. That is $0 to the top $3 million house. In the whole county, there's only 60 to 100. And when you look at that count, there's also about 30 to 40 of them that are under contract with a contingency attached. So really, there's only about 40 to 70 houses on the market on any given day. That is about 4 to 10% inventory. It is short. Now, if you pick up any newspaper, you're finding this is in most markets throughout the United States. The kicker of this thing that nobody really wants to talk about, this shortage, is yes, we've had a slowdown in supply during the mid-2010s to the 20s. Yes, we had a COVID problem and a supply chain problem. But the biggest thing I think is driving it is that there's about 2 million people coming across the border, and there's only 4 towns in the country, 4 cities in the country that have more than 2 million people. It's Houston, Chicago, New York, and LA. All cities are smaller than that. And so this 2 million people, everybody forgets that they're going to live somewhere. They think because they're illegals, they're not living somewhere. No, they are using up inventory, and that inventory is being bought out of the market. It's happening every single year, and it's one of the strongest drivers of the low inventory, and it's happening in almost every market as well. So you have all these different catalysts that are occurring, and that's why even though the rates are changing and there is going to be some difference in fluctuation, in general, we are going to be short on supply of houses for the next 5 to 7 years. And I talked to some investors, and they think that the government is going to have to step in and build houses again like they did in Miami and different places when the GIs came back. We can't really build fast enough to get ahead of this right now. So even though the economy is difficult, it definitely, in my view, is not going to kill the real estate market, because in 2004, 5, and 6, the difference between that feeling, although it feels the same, is that there was a glut of inventory in the marketplace. They were producing houses faster than people could afford to buy them. And by the way, this is an opinion, and so I can be wrong. I would love to hear your argument on it. You can shoot me an email on it, or you can give me a call on my cell phone, 608-306-1199. This is my opinion. Hope you enjoyed it, and I'll be reaching out again shortly.